Welcome to the Private Practice Startup Podcast, where we help mental health professionals grow their dream practices and live a life they love. We chat with successful private practitioners, business coaches, and marketing experts, bringing you tons of practice building tips. We invite you to take advantage of our private practice paperwork and our signature marketing e-course. And we have a gift for you. This is the exact methodology we use to create our six-figure private pay practices and have helped many other therapists do the same. Go to privatepracticestartup.com and on the homepage, click the button to download a free copy of your dream private practice playbook. Now on to today's episode.
Hey everybody, welcome back to another episode of the Private Practice Startup Podcast. Today we're talking about actually one of my favorite topics, which most of you are going to be like, oh, cringeworthy, and you're probably going to want to go to sleep. But love it or hate it, death and taxes are here to stay. So we're not talking about death. We're talking about taxes. And what a better time of the year to talk about taxes than at the end of the year as we start the year off and have to think about our taxes. And who better to talk to us about taxes other than Andrew Riesen, co-founder and CEO of Herd. Today, we're going to be talking about 3 mistakes, therapist, yes, you're making on your taxes. So once you listen to this podcast, hopefully you can avoid those mistakes. And like Kate and I always love to talk about, once you have a system and or you leverage people, technology, and systems to help you, taxes can definitely become a lot easier. If this is your first year in private practice, good for you for listening to this podcast. Taxes is definitely something that you all should outsource. Don't try to do it on your own, because if you ever saw the actually code of taxes, it is a very, very thick book that could probably be used as a weapon or something like that. That's how thick it is, and it changes all the time. So this is one of the areas that you really should have a professional and team supporting you in as you tackle your taxes. And I always say, I know that when we think about our accountants, it feels like an expense, and it is. It's also a write-off, but a good accountant and team can actually save you thousands and thousands of dollars because they're the professionals. We're not. Anyway, so that's my shtick about taxes and how important they are and having a team. So let's dive in. I'm going to introduce you to Andrew. Andrew is a mission-driven entrepreneur, financial accountant, and the CEO of Herd, the financial back office for therapists in private practice. Prior to Herd, Andrew worked at PwC, where he worked as a financial accountant, helped build an internal software incubator, and co-founded an affordable sales tax solution for small to medium-sized businesses. And as we were getting ready to introduce Andrew before we hit record, we're like, how is it we've never had you on the podcast? We did an amazing masterclass with Andrew, maybe about 2 years ago, I think. And it was great, all about taxes. So we're excited to actually have you here today, Andrew. Welcome.
Thank you very much, Kate and Katie. Excited to be on the podcast and here to talk about all things nerdy accounting and taxes.
Kate might be quiet. You and I might get really excited. Kate, when she hears numbers, she kind of glazes over.
It's so funny. Yes, I love to look at numbers. I just don't like to compile them myself. So I outsource this. My husband is actually the CFO financial guy of my private practice down here. And so he loves all the numbers and tax stuff and whatnot. But if not, I would be working with you because you guys are amazing.
Well, thank you. Oh, go ahead.
Before we dive in, we hope that you joined us last week as we talked about, Kate and I were your hosts and guests as we talked about 6 ways to master your mindset. So definitely check that out. And let's just take a quick moment for our sponsor.
Directories can be a good source for new clients, but which directories are really worth it? Well, according to an extensive review of therapist directories by Very Well Mind, more than 90% of therapists recommend Mental Health Match. We love Mental Health Match because they understand that the therapeutic relationship starts even before the client contacts you. They've set up their directory to give clients a sense of confidence in you as a clinician and connection with you as a person. Their smart matching technology makes sure you only hear from clients who are a good fit for your practice. And referrals come with insightful information about the client, their presenting problems, and what they seek in a therapist. With over 10,000 clients coming every week, Mental Health Match is a great way to find the clients you want. Erin Moore, a New Jersey therapist, said, "I've been getting almost 2 referrals a week from Mental Health Match, and I like their ability to match me with my niche clients. These clients reflect my skill sets, and they come ready and open to the therapeutic process. This is energizing for both the therapist and clients. We could not agree more. And now you can try Mental Health Match for free for 90 days. Just go to mentalhealthmatch.com and use referral code STARTUP. That's mentalhealthmatch.com and referral code STARTUP."
So how does one fall in love with taxes, Andrew?
Yeah, these are the things that I have been the questions that I've been reconciling in my mind for a long time. The journey away from accounting is something that I've been trying to embark on for an extended period of time. I started in accounting, then I tried to build software, and then I ended up building accounting software. And then Victoria and I were very, very interested in solving that access to mental health care problem, which is a very nuanced and complex problem. We learned very, very quickly, and then ended up building accounting software again. So here we are. I've been trying to escape.
So tell the audience, who's Victoria?
Victoria is my wonderful co-founder at Herd, and she leads all things technical. So she's responsible for the engineering, the product, and design. So if you are a Herd customer listening to this and you're like, "Hey, Andrew, the application looks awesome and we love using it," that has nothing to do with me and everything to do with Victoria and the amazing team that she's built. So Victoria is my wonderful counterpart.
That's awesome. And how did you get really excited about niching down and working with therapists specifically?
Yeah, so for me, it's, I would say, personal more than anything. And so when I was at PwC building accounting software for small to medium-sized businesses, so mainly like growing startups that were coming across exposure from growing so quickly into all of these different states, one of the things that I realized is I have the toolkit and the knowledge to know how to go out and do this on my own at this point. And it took a while to figure out that I like had the courage to be able to do that. And ever since I was a little kiddo, I've dealt with anxiety and panic disorder and depression. And I think non-ironically, the gal that I met was when I was 16 that ended up becoming my wife is now a clinical psychologist that specializes in DBT. And so I've seen what it looks like to go through the process of becoming a clinician and moving into private practice. And I've also seen north of 5 or 6 therapists since I was 15 years old to manage my mental health. And so for me, it's deeply personal, and to be able to exist at the intersection of accounting and taxes and all of this like weird, really nerdy stuff that nobody really cares about. And also be able
except
to
me.
except Katie. Yes, very true. It's just like it's super fun. And I think this audience more than ever has been unsupported and kind of sits at this weird place between, do I do it myself and spend a bunch of time trying to figure it out and maybe screw it up? There's a lot of people that are awesome that rock at it. Like Jenny Schottmiller has a huge community of folks that do it by themselves, and not a knock on that. I think there's a right place and time for that. But then the alternative is, holy cow, I have to pay a bunch of freaking money to service professionals that aren't going to give me the time of day. And so, you know, the biggest thing that we saw is like there needs to be something in the middle to where people have the software they need that puts it all in one place, and also the support from professionals to answer those questions that come up throughout the year. So people don't feel like they're alone, because oftentimes when you're in private practice, it feels incredibly isolating. So having that business partner in this area that you don't really understand or know super well has proven to be quite effective. So love what I do.
Awesome. And thank you for the backstory. And I love that because, you know, we've found in the many years that we've been doing this, a lot of, you know, whether there are sponsors or guests who have different businesses, is they usually have some deep personal connection. You know, Brad from Therapy Notes, he created the software because his wife is a therapist. You know, Perry, who sold Brighter Vision, I think it was his mother-in-law was a therapist or something like that. So it's just really cool to hear that. And it's just really deeply personal. And we appreciate your support in our community because we know the community needs it. So Andrew, tell us what those 3 common mistakes are that therapists make.
So there are many, let's not frame them as mistakes, but there's many opportunities for growth that clinicians do have, especially when they're growing and scaling their practices. And I think there are 3 common things that we can dive into and talk about that if you are not doing these things right now, there's an opportunity for you to lean into these and find a better pathway forward. So those 3 things that I'd love to dive into and chat through are, the commingling of your personal and business accounts. So as I like to say, the separation of church and state. Let's make sure that those things are separate. Not taking advantage of different deductions or write-offs that you might be able to take advantage of that maybe you feel fearful or, questioning, is this a write-off? Is this a deduction? No, I'm just going to leave it off. We'll talk through how to approach that and overcome that. And then not paying quarterly taxes. We have so many folks that are coming into the herd for the first time, oftentimes after the first year of being in private practice and finding out, oh, wow, federal income tax, state income tax, self-employment tax. If you're in New York, local income taxes, that's a lot of taxes I have to pay. And I didn't set aside money throughout the year. And I had a very surprising and large tax bill at the end of the year.
Yeah, that's really tough. I know I remember the first year that I was in private practice. Now I'm an anomaly because I don't know, I'm geeky with taxes and things like that, but I would save, like 25% into a savings. And I remember going to my accountant and he was kind of like worried about sharing, this big tax liability. And so he's like, and I'm like, what? And he's like, you have a big tax liability. I was like, okay. Like I was like, there's some excitement in my voice, and he was like, "This is weird." And then he turns the computer screen around, and I think it's like $17,000. And I was like, "Yes!" And he's like, "What?" I was like, "I got 25,000 saved. I feel like I made money." And he's like, "Okay, you are just an anomaly, but that's good that you do that. I'm glad." But obviously, then you start paying the quarterly taxes and all that stuff. So, how do you help therapists? Let's start with the quarterly taxes. How do you help therapists with that?
Yeah, so let me frame up quarterly taxes and why they're important, and I'm happy to chat through how we help folks with it. So that big book that you were talking about that could potentially be a weapon, the IRS guidance and codification, they're quite clear as it relates to when it is appropriate for an individual business owner to pay or have to pay quarterly taxes. And so that narrative from the IRS is that if you anticipate a tax liability of over $1,000 through the course of the year, you're responsible for paying taxes on a quarterly basis. And so that means in April, June, September, and January for that current year, you're responsible for getting an understanding of what is my effective tax rate. So there's you, but then there's also probably you that has a partner. And then there's you that also maybe has separate income. That full picture is what influences what your quarterly tax estimates are. And so it also influences what your effective tax rate is. And so getting that full picture of what your income or your gross income looks like, and then moving down to taxable income for you as a family unit. So whether it's individual or you plus somebody else, that's going to get you a sense of how much you should actually set aside. Because to your point, Katie, I think a lot of people here in listservs or memberships or different groups like, hey, I need to set aside 15%, or I need to set aside 30%, or I need to set aside 40%. And it's so unique to the individual. And I would imagine that after that first year and working with your accountant, you said, hey, I saved an additional $8,000. Like maybe we can adjust how much I'm setting aside, because it's great to be able to, set aside that money and not have that tax bill at the end of the year. But what's even better is to be able to have access to that cash, because maybe you need it on a personal level, or maybe there's an opportunity to make investments throughout the year. And we know compounding interest has a big opportunity to help folks make some additional money as well, or investing to, reduce your tax liability through a SEP IRA or a solo 401k. And so quarterly taxes, it's very important to first figure out what does that total picture or full picture look like? What is that tax rate for me? And then based on that income that you're earning, to your point, Katie, whether it's on a monthly basis or a quarterly basis, or some people do it on a weekly basis, set aside that amount of money throughout the year. And then on the quarterly basis, when those taxes are due, go ahead and make that payment. And it's going to save you a big headache at the end of the year. Because if you haven't set aside that money and you get to the end of the year, you might be in for a big surprise and be wondering, how the heck do I approach this? What do I do? I haven't set aside any money. And there are certainly approaches that you can take and payment plans through the IRS, but it's better to get that grounding in the first place and overcome that. From a herd standpoint and how we help folks with quarterly taxes, we have a quarterly tax calculator, actually a tax engine is what we would call it internally at Herd that we've built. And so we maintain all of the tax rates, all of the tax laws, all of the tax tables at a state level, at a local level, at a federal level. So as all of these are changing, and on a quarterly basis, we'll provide you a estimate that you can then directly pay through the Herd app to, take it off the plate and really not have to think about it and just kind of streamline that process for yourself.
That's awesome. Now, I know you might not have an answer for this, but why do they say quarterly when it's due April, June, September, and January? I've always wondered that.
No, it's a good question. And I think the general response would be there's no rhyme or reason to many, many of the things that the IRS do. And we're subject to our overlords and have, just the guidance that we have to follow.
Fair. So why don't we just take a quick moment for our sponsor before we move to the second item? As a private practice owner, there are dozens of things to worry about. If you decide to accept insurance billing does not have to be a worry. Practice Solutions is a remote billing company who connects providers with billers in the U.S. who specialize in mental health billing. Their expertise has helped clinicians increase and maintain steady revenue by submitting and following up on claims regularly, resolving old aging claims, and performing eligibility and benefit checks. With Practice Solutions, you're assigned a billing expert who learns the ins and outs of your practice, functioning as an extension of your own team. So you can focus on what matters most, your clients and growing your practice. One of Practice Solutions' current clients says, Practice Solutions has been amazing for my practice, its growth, and my peace of mind when it comes to billing. Practice Solutions works with clients ranging from solo practitioners just starting out, as well as to larger group practices with multiple clinicians. Practice Solutions offers a free billing consultation to determine if their services are a good fit for you and your practice. Visit practicesoul.com/startupnation and schedule an appointment. Again, that's a free consultation at practicesoul.com/startupnation. As a therapist, I can tell you from experience that having the right EHR is an absolute lifeline. I recommend using Therapy Notes. They make billing, scheduling, note-taking, telehealth, and e-prescribing incredibly easy. Best of all, they offer live telephone support that's available 7 days a week. Look, don't take my word for it. Do your own research. Therapy Notes is the #1 highest rated EHR available today with 4.9 out of 5 stars on Trustpilot and Google. Go to therapynotes.com and enter code PPS as in Private Practice Startup and receive a special 2-month trial, absolutely free. And hey, if you're coming from another EHR, no worries. Therapy Notes will import your demographic data quick and easy at no cost to you so you can get started right away. Trust me, don't waste any more of your time. Go to therapynotes.com and enter code PPS for your 2-month free trial. So we're going backwards today. So, and I think this really relates to the quarterly taxes, right? So tell us a little bit about, you were saying folks are a little bit like worried, fearful, or concerned about taking deductions. Tell us about that.
Yeah, 100%. I think you don't know what you don't know as a small business owner. And this goes for many clinicians that haven't had the luxury of nerding out over accounting or having an accounting background. The reality is, you don't always know what is a deduction. And then in the case that there are certain items that may or may not feel like a deduction, that's where the fear arises of, oh gosh, like, should I take this? Is this an audit risk? Is the IRS going to come get me? And so the recommendation that I always provide, and, we can work back into the commingling piece of this as well, is when you set up a separate business account. So whether you're a sole proprietor and you've got a separate tax ID, and you decide, I'm going to set up a separate business bank account, all the transactions will flow through, great. Or if you're a sole proprietor and you just set up a separate personal checking account where you run all of the business transactions through there, taking advantage of all of those expenses, centralizing them in one place, and, great, set up a system like Herd or use Wave or use QuickBooks, but getting that all into one place makes it so much easier for an accountant at the end of the year to say, hey, I'm going to adjust this out, Katie, because this isn't actually an expense or a deduction that we can take advantage of this year. I'm going to, make sure that we capture all of these expenses. And so when you centralize it into one place, then you tell yourself the story. If it looks like a business expense, it smells like one and feels like one, let's run it through, and then have your accountant tell you what that looks like at the end of the year, instead of like Andrew coming to the dresser or coming to his drawer and being like, oh my gosh, I have this receipt and then I have this receipt. Like, I think this is an expense, maybe not. Oh my gosh, they said mileage write-off. It gets crazy and super hectic at the end of the year. And some people are masochists and like to spend 48 to, 72 hours of their time just sprinting through that and having a massive spike in cortisol from your anxiety and stress. But my recommendation is...
I know someone like that in my personal life.
Yeah, it's just do it throughout the year and run it through and let a professional help you figure it out. And if you're not working with a professional, great, still run it through the same place and lean into your community. Again, recommend working with a professional, but of course I'm biased in that perspective. So several deductions that I think people often don't think about or take advantage of are some of these indirect expenses. So everybody's basically operating in some sort of a telehealth capacity. Maybe they're sharing a physical office space as well. That physical office space, absolutely deductible. Your home office space, that's a huge deduction that you can take advantage of. And with the IRS, there's two different approaches that you can take. You can take a simple method where the IRS is like, hey, like, I don't really think that they're going to be like digging into this too much. And so we'll give you $5 up to 300 square foot. And that can be, $1,500. But there's also a standard approach that you can take where you have the rent that you're paying, the utilities that you're responsible for. And then there's a portion of your house that attributes or relates to your home office. And oftentimes when you add that rent up over the course of the year, when you add those utilities, or if it's a mortgage over the course of the year, that's going to account for much more and a larger deduction than you would get by just taking the simplified approach. And certainly from, not taking any sort of deduction or write-off. A couple other ones would be internet and phone bill. We live on the internet. We live on our phone. And for clinicians, as I know with my wife, her phone is constantly connected, certainly doing DBT. Her phone is connected to her at all times, and she's using her phone and she's using the internet for work. And so figuring out what is attributable to your home office and to yourself indirectly from a business standpoint is another deduction that you should absolutely take advantage of. So take advantage, put everything in one place, make it really easy. And then there's all of these kind of weird indirect expenses that exist outside of, what you might think about from a normal course of business that we absolutely want to be thinking about throughout the course of the year as well.
Nice. And then what's the last one? I know you alluded to it about commingling expenses.
Oh, commingling. So commingling expenses is a big no-no, certainly if you want to work with an accountant as well, and a big no-no if you want to avoid this headache at the end of the year as well. And so my recommendation, and I'll just talk about it structurally because this is a big thing that a lot of people can action just coming out of this call if you haven't done it, is let's go back to a couple different scenarios. So whether you're a sole prop or whether you've set up a separate business entity like an LLC or a PLLC. If you're a sole prop, two ways you can approach this. If you're a sole prop, no tax ID, I'm Katie. I, just came out of my agency and I started taking on clients. I'm seeing 10 clients and I do nothing else. I'm a sole proprietor in the eyes of the IRS. My recommendation for you, Katie, would then in that case be just set up a separate personal checking account, set up a separate personal savings. Income from simple practice is coming into that personal checking like you're doing, setting aside that money into the personal savings. That's your, I don't touch it. This is tax funds, paying yourself out of the personal checking account, either on a biweekly or a monthly or quarterly basis, however you want to approach that. And then connecting some sort of accounting software over the top. So whether it's Herd, whether it's Wave, whether it's QuickBooks, whatever you use, centralizing it into another place to where you can then start to categorize the transactions, or an accountant can start to keep track of all of those transactions. Separately, if you're a sole proprietor, separate tax ID, you've built that appropriate business structure for yourself to separate your personal from your business, get a business checking account, business savings. If you're an S Corp, or I guess if you're an LLC as well, it's highly important that you do separate business from personal, because you've set yourself up in a business structure to have the corporate veil or the shield that protects your business finances from your personal finances. And so if you cross those expenses over, you're potentially opening yourself up to litigation or, liability issues over time. And of course, as clinicians, you're responsible for professional insurance and liability insurance and malpractice insurance. So the liability shield of the corporate veil doesn't protect you all, but it's important to have that separation if you do have a legal entity that is formed and you want to reap the benefits of that.
Gotcha. Any bonus mistakes that you want to throw in, or as you said, growth opportunities, which I appreciate.
Bonus growth opportunities. I will debunk a myth around S corps because I think a lot of people love to talk about S corps in the world of therapy, and I think it's so often one of the first things that people come in and ask us about. They say, "Oh my gosh, I should be an S corp." Like I heard, or Andrew, you were on a podcast or you were on a webinar and you're like, "Hey, you can save X amount of money," and then the membership told me I could save X amount of money. So there's two things. Like, yes, there are opportunities for small business owners and clinicians to save money by becoming an S corp. And that happens because you're separating your business from your personal self. And so you're reducing the amount of self-employment tax that you're paying by paying yourself a salary through payroll. But the reality is when you become an S corp, you have an additional tax return. You have payroll that you're setting up and responsible for. The responsibilities from an accounting or a bookkeeping standpoint become much, much more complex. And that's a point where you absolutely should have a bookkeeper and absolutely will need a tax preparer at the end of the year to support you with this process. And so administratively, there are big changes that come when you become an S corp. And so you have to figure out the balance and the timing of when it's right for me as to, is this dollar amount justifiable that I'm saving from a tax perspective to then become an S corp, right? Because at $50,000, you may not be saving in business income. You may not be saving that much by becoming an S corp, and you actually may end up paying more. But if you're a business owner that's, making over $100,000 in profit, yeah, there's probably a big savings opportunity. So if you're thinking about becoming an S corp, think, hey, if I attributed a dollar value to my time and thought about all the additional steps and work that I'm going to do, knowing that accounting is a relationship with your accountant and I have to do stuff as well, is that worth it to me? Do I want to take that on? And are the savings surmounting past that dollar value that I've attributed to myself and the additional time that I'll have to spend as well as the cost? So I would say that's another big thing because a lot of folks just want to become S corps because it feels like the thing that folks should do, but it's very, very personal to everybody's individual situation.
Awesome.
I like how you explain that. It's very easy to understand, and it gives people kind of like that goal to work towards if they're going to establish their business in that way. That it's not something to do right out the gate. So that's very helpful. It's like stepping stones as you grow and as it makes sense for you to change your business in that way.
Yeah, 100%. And I think the piggyback on that is like, my recommendation would be if you are in the first year of your private practice, operate in a simple structure, operate as a sole proprietor, unless you're going to be making like $150,000 or $200,000 right off the bat. Starting off operating as a sole proprietor will just save you a huge headache as you're getting your feet wet underneath yourself, figuring out the clinical side of private practice, managing your notes, managing your schedule, managing your workflow. Adding in those additional complexities could just make it a little bit overwhelming and stressful for you from the get-go.
Good advice to keep it simple. There's too many other things to manage. We do not need to overcomplicate this aspect.
Yeah, 100%.
Not at all. So the three common mistakes, or as Andrew said, the growth opportunities we talked about today were commingling expenses, not taking advantage of deductions, not paying quarterly taxes, and a bonus growth opportunity all about S corp. So that is good stuff. So Andrew, tell us what's kind of new and upcoming with Herd and how you guys are growing to serve our community better.
Yeah, great question. And thank you for asking. So lots of changes at Herd, which is very exciting, both for me and for the company. Once upon a time, as I was chatting with you guys, it was Victoria and myself and a couple accountants and engineers. And now we're a team of 50 plus serving thousands and thousands of mental health providers and therapists. And the biggest change I think that's taking place at the company is bringing in leadership across all of the different functions as we've started to grow. So we've brought in an incredible COO in KK who has scaled out her own requisite functions in onboarding and bookkeeping and payroll and taxes. So really starting to build functional knowledge across all of these different areas. Now that we were able to gather up all of that knowledge and translate it back to our customers, and continuing to build so much amazing product and do so much amazing foundational work on our bookkeeping product, on our quarterly taxes product, on our annual taxes product, and certainly continuing to deliver value in our payroll product as well. And so there's just so many exciting things going on. And I think the name of the game right now for us is continuing to build around this incredible leadership team that we've brought in, and continuing to support our team members and continuing to build a lot of product. And I think the big question for us is figuring out what's next. What is the next thing that we want to build to support clinicians? And so if there's anybody listening to this podcast that wants to share feedback on what you'd like to see us build, I'd love to hear it.
Just anybody. And one person. I'm sure there's thousands of people listening to this podcast. And I know that you have a giveaway for our audience, Andrew. What is that?
Yes, we have a free month that we are giving away, and there is a code that they will share in a follow-up email, or I would imagine alongside of the podcast. And so we would love for you to come and try out our services, give us a month free, and see if it's a good fit for you. And if it's not, that's totally fine as well.
We'll put that code on the show notes page so everybody can find it there.
And it's startup, but yes, like Kate said, we'll put it on the show notes just for ease. Andrew, thank you so much for joining us. I know, like I said, this is one of my favorite topics. People don't know, but I've read numerous tax books and know numerous knowledge about taxes that I guess most people don't know. I just think it's interesting. I always love to find the loopholes and understand how I can maximize my deductions. So I pay less taxes. I actually paid only 14% taxes last year. So
wow,
I was very proud of myself. Yes, I know. I was talking to someone yesterday about like an investment I was making. He's like, what are your tax bracket? He's like, wow, how'd you do that? I was like, playing the tax game. So it's definitely possible, but I'd nerd out a little bit like Andrew does on taxes. So we hope you guys join us next time as we invite another. It's so cool, like people in the tech world and have done things like Andrew creating software. We have Christine Lee, who actually used to work for Google. She left Google to build Mentaya. And Mentaya is a company to help therapists utilize private pay and for clients to utilize their out-of-network benefits and get paid for their services. So you definitely do not want to miss that podcast next time as we invite Christine to chat about Mentaya and how she's making a big dent in the therapy world and changing things here. So that is awesome. Kate?
Yeah, Startup Nation, we hope you enjoyed this episode with Andrew here. And we always try to create content that is meeting your needs along the private practice journey. So if there's a topic that we have not talked about yet, or perhaps you're interested in being a guest, contact us. And we always love hearing your feedback. We want to encourage you to subscribe, rate, and review the show. You can do that on the show notes page. And of course, share with your friends and fellow colleagues so we can continue to help more therapists have thriving private practices across the globe. So we will see you next week, everybody. In the meantime, stay inspired.
Take care.
Thanks for joining us on The Private Practice Startup. Visit theprivatepracticestartup.com for awesome resources, free trainings, attorney-approved private practice paperwork, and so much more.